the relevant to understanding the audit, the auditor's responsibility and the auditor's report. What are the situations where these are the important things. Okay, where what explain the situations what we require in other matter paragraph. To communicate that the auditor report is intended solely for users and should not be distributed to or used by other parties. See, auditor's report, when we take into consideration, we in the annual report there will be one the in the annual report the auditor's report will be on the first or in the initially. Okay, we have said intended users. Intended users is exclusively with respect to what? With respect to shareholders. But here they are giving like this. Now if you take the web, you will find all the reports, all the financial reports are there. It is a part of the thing. Should not be distributed to or used by other parties. It is rarely happens. When law, regulation, generally accepted practices require permits the auditor to provide further explanation of the rest. When law, regulation or generally accepted, if the auditor is asked to provide further explanation on specific matters, that has to be included. To explain why the auditor has not resigned when a pervasive inability to obtain sufficient evidence is imposed by the management. Denying the auditor access, anything, is it any other paragraph? Is it to explain why the auditor has not resigned? Okay, when the pervasive, is it when means it is going to have an overall impact? Is it impact inability to obtain sufficient information? Then we have to mention in the other matter paragraph. But the auditor is unable to withdraw from engagement due to legal restrictions. Means in some cases is that they are not in a position to resign, or in some positions, in some situations, okay, they cannot withdraw from the engagement. They are due to legal restriction. Legal restriction means, see, if you are resigning from the auditorship, you have to get the confirmation, you have to intimate the regulatory, all the regulations in terms of communicating not only to the shareholders, but also we have to communicate to the external parties. To communicate audit planning and scoping matters where laws and regulations require. Where to communicate audit plan and scope, okay? Where the if there is a situation where we have to disclose the audit plan, then we have to disclose in the other matters paragraph. When the entity prepares one set of accounts for a general purpose framework and another set in accordance with the different one. Is there one we are preparing according to the UK, one according to the international standard, and engage the auditor report on both the sets. This is the common factor, is it right? This is the common element. This is the common element that we will come across. That means that is the reason we are talking about the US GAAP, okay? US GAAP, and we are talking in terms of IFRS. Okay, we are talking about a US GAAP and UK, okay? Here only you see the things. When you are talking about the two different aspects are there. One is from the UK perspective, one is from the non-UK international perspective, okay? The statement of ABC for the company. See, in all the cases, this is what they have been emphasized very clearly. The financial statements or the year ended were audited by another auditor who expressed an unmodified opinion on those statements. If the opinion will differ, okay? If the opinion is differing, one auditor will have a modified and another auditor will have unmodified opinion, okay? Situationally, we have to work it out. Position in the audit. When an other matter paragraph is included, to draw users' attention to a matter relating to other responsibilities. Fine, this is what it has been concluded. Okay, what it says, when an other matter paragraph is included to draw user attention to the matter relating to not the audit responsibility, other reporting responsibility in terms of environmental, okay, in terms of sustainability, okay, in terms of corporate governance. These are the other reporting responsibility. In the auditor's report, the paragraph may be included in the report on other legal and regulatory requirement section. That is the reason, if you take into consideration now, what is the mandatory requirement? Mandatory requirement is with respect to the corporate governance report. Mandatory requirement is, in some cases, you have to add the environmental reporting, sustainable reporting. Those things we are mentioning in the other matters paragraph. Fine. This has been done. Is that I'm not going to take that much here again. We are talking about the, but read once, okay? Signature, communication with those charged with governance, okay? We communicate. I'm not going through this, okay? This section I'm just skipping it off, okay? Communicating with the, now when you are communicating those charged with governance, technically speaking, is practically it is nothing but the board of directors, okay? We are communicating with the client operational matters arising from the audit, okay? Communicating with operational terms of agreements and logistics. They are provided to the auditor, okay? Provided to the auditor by the client, okay? Terms of engagement with respect to the client and the auditor. Matters arising from the audit, we know deficiency, independence, significant findings, and expected modification. They are covering slowly and steadily each and everything, is right? Now, if you take into consideration, there is another side. We have done this in the previous case. We have done ISA 260, communication with those charged with governance. Is that actually oversee the strategic direction? Strategic direction is the board of directors. These include directors, executive and non-executive, and as well as the audit committee. The persons who with executive responsibility for conduct of the operation. Mean they are identifying two things. One, they are identifying the directors on the one side, and on the other side they are talking in terms of the management. That is the reason. First you have to discuss with the management, then we have to say that those charged with the governance. The hierarchy will have its importance. Well, for small and medium enterprises, medium-sized enterprises, this is often not the case as such. There is a possibility, therefore, the auditor could find themselves reporting to the owners of the business. The auditor could find themselves reporting to the owners in the small and medium-sized businesses. Matters related, discussed with them in their capacity. What are the reasons? Okay, what are the reasons? To communicate responsibilities to communicate responsibilities of the auditor as an overview of scope and timing. To obtain relevant matters, to report matters on a timely basis, and it's a two-way communication. These are the reasons, okay? The reasons for communication. Is that reasons for communication with respect to the scope and timing relevant to the audit, timely basis. What are the matters which are going to be communicated? What are the, in all the cases, if you take the substantive procedures, if you take the mostly substantive procedures, what we'll do, the last one will be what we have to communicate with get the written communication or communicate with get the written communication from the directors. Okay, in some cases, in most of the cases, it is a common understanding. Discuss with the management or those charged with governance. Okay, and apart from that, what are the things we will cover? discuss the review the board meeting. Okay, that's are going to be worked out. The responsibility in relation to financial statements are the plan, scope, and timing of the audit include what is the audit approach with respect to the systems of internal control, the extent to which auditor is planning to use the work of an internal audit, and a business risk that may result in material misstatements, and most importantly, communication with regulators. See, this is the new points. Okay, we have done that the approach system of internal control. Okay, we have also worked out the planning to use work of an internal audit. This we have not done. This we have done doing for the first time in this part. Okay, in this level, we are talking about the audit risk. We are not only talking about the audit risk, but also we are focusing on business risk, and most importantly, communication with regulators. They gave you significant findings in terms of qualitative aspects of accounting policies, difficulties encountered during the audit, matters arising during the audit that were significant matters arising during the audit, written representation the auditor is requesting. Okay, these are the significant circumstances that affect the format content of the audit report. Okay, communicating 1701. I am very specifically about this standards to be given in reference when we are responding in the question answers. Any other matters with they think that it is significant to oversee the reporting. Now we see the thing. Just have a look. Okay, just have a look. What are the things to be management and those charged with government? They are first mentioned. Fine. We know that. Okay. Reasons of communication, matters to be communicated. What are the significant findings? Now, they have given another aspect to this, is that matters of auditor's independence. A statement that is that what they say, fine, about their disclosure of the independence requirement. A statement that the firm has complied with ethical requirements. A statement that the firm has complied with ethical requirements, including public disclosure of equipment. Professional fees for audit and non-audit services. Safeguards applied to eliminate or reduce threat to independence. One side. See, what are the things they have said? They are talking in terms of ethical factor requirements. They are talking about the professional fees. Okay, they are talking about and they are in the other case they are talking about the threats to independence. Ultimately, what constitutes a matter? What constitutes matter requiring attention of what constitutes a matter requiring the attention of those charged with governance is a matter of professional judgment. Delays in obtaining information for the unreasonable brief. Ultimately, what constitutes a matter requiring the attention of those charged with governance is a means why we are seeking the attention of those charged with governance. Okay, why we are seeking the attendance? Because delay in information, unreasonably brief time which needs to be complete, expected limitations on the audit, either imposed by the management or other circumstances. Then only we are asking for the attention of those charged with governance. Is it the potential effect of financial statement or material risk or exposures, pending litigations? It is not cleared by the management or the who are the people. It is not cleared by the management. Or any other circumstances, okay? Or any 1 second. Any pending litigation, then we'll ask with that those charged with this is all we have done, okay? Where we in the extreme cases, the last option is we are communicating with those charged with governance, okay? Identify a summary, identify misstatement, whether corrected or not by the entity request and a request that they have been adjusted. Material uncertainties relating to the events and conditions that have significant doubt on the going concern. Again, any issues with the going concern, we will discuss with those charged with governance. Any other matters agreed upon the terms of audit engagement. What they are saying is, in which situations, in which circumstances the auditor is supposed to communicate with those charged with governance. They have mentioned about the control deficiencies also. The same thing is there. Is control communicating deficiencies in internal control with those charged with governance and management. The first task of the auditor, therefore, did to distinguish between the simple deficiency which do not require communication and means when in the previous case also, in this case also, if there are any significant deficiencies or significant doubt, okay, we are talking about only, see, we are not going to communicate with respect to each and everything. If there is a significant doubt or significant deficiency, then only the things has to be taken up with those charges. Simple concept, okay? The simple, what they say, significant one that do. Deficiencies has been defined as occurring when a control is designed, implemented, operated in such a way that is unable to prevent. This is the control risk. A control is designed, implemented, and or operated in such a way that it is unable to prevent or detect or correct misstatements in the finance on a timely basis. A control necessary to prevent or detect and correct misstatements in the on a timely basis is missing. We are talking very specifically in terms of what? Very specifically about internal controls. Okay, internal controls. A control is there, but we are not going to prevent, detect it on a timely basis. A control is necessary to prevent, detect, and correct misstatement the financial on a timely basis is missing. Any control system has been there, but it is not implemented or it is not in effective operation. Significant deficiencies are those which merit the attention. Now this is very, very qualitative. Okay, this is very, very qualitative judgment. In the communication, the auditor includes in the communication with those charged with governance. Is that what are the descriptions of deficiencies and potential effects? Is that what we have done in the previous case? We have identified the deficiencies and we have given the recommendations. Is that it is not a recommendation. We are not only recommending, but we are communicating to the higher ups. Okay, to the higher ups. An explanation of the purpose of the auditor to express an opinion on the financial statement, not to help redesign internal systems. What does it mean? An explanation for the purpose of the purpose of the audit. To express an opinion on the financial statements, not to help redesign internal systems. Express an opinion on the financial statement, not to help redesign the financial internal systems. Okay. Yeah, fine. Let's put one question mark there. Okay. What you understand from that statement, just let me know. An explanation of the purpose of the auditor.
So I think it means that the auditor should just express an opinion and not tell them what they should do with internal systems.
Oh yes, that's okay. I got it. Okay, means they are only giving the opinion and that's all. Okay, they are not going to be part of the system. Is it right? They are not going to be part of the redesigning the system, not to help redesigning the systems. Okay, they just want to express the opinion. The explanation of why consideration of internal controls is why the explanation why consideration of internal control is relevant to the audit. The importance of internal control. That is an explanation why the matters are reported are only those identified during the audit, and consideration should be significant enough to report. An explanation that the matters being reported are only those identified during the audit and considered to be significant enough to report. As well as reporting to those charged with governance, the auditor should communicate deficiencies to management on a timely basis. Fine, on a timely basis. That's all. Full stop there. Okay, full stop there. In the brackets it is there, including those significant ones reported to those charged with governance and others, less significant ones meriting the attention of the management. Okay, that means if there are how you have to communicate the deficiencies in the internal control with respect to the client matters. We'll complete this and we'll take the things as such. Okay, we'll do one question. Okay, we'll do one question on this. Okay, this is the UK syllabus. That's fine. When a KM is necessary, any significant with respect to KM, when a KM
E-audit matters.
Huh?
Key audit matters.
K means key audit matters. When a key is necessary in respect of audit of consolidated financial statement, the auditor are also required to communicate key audit matters to the auditor's report of a separate financial statements. 1 minute. Is necessary in respect of the audit of consolidated financial statement. Is the auditor also required to communicate KM in the auditor's report of the separate financial statement? The auditor should determine KM in respect of each set of financial statements. Okay, in terms of consolidation means subsidiary as well as in each set of financial statements. A matter may give rise to KM for both the audits. Individual as well as consolidation. But both the audits means individual as well as consolidation. KM should be described in the context of each financial statement. Key audit matters should be described in the context of each set of financial statements. If the KM is only relevant to one set of financial statements, it's only be included in the relevant audit. If KM is only relevant to one set of financial statement, it should be only included to the relevant. Means we should not mix it up. A matter may give rise to both audits. The KM should be described in the context of each set of financial. Key audit matters. What is the effect of KM previously communicated in the audit reports in circumstances where the auditor reissues the report or amends the report previously issued? Read it again. What is the effect of the KM previously communicated in the auditor reports in circumstances when the auditor reissues the report or amends the report previously issued? Just read this one. I am underlining the things. I think emphasis on other matters, okay? Emphasis on other matters paragraph. Should then also cross reference to the emphasis on other matters or them have to clarify that both are in respect of the same matter. They have to communicate with respect to the current period only. Okay, they say that whether comparative financial statements, no, we should not take past, we have to key audit matters for the current period. All other significant is considered to be KM. Key audit matters are more significant depending on the nature and may not necessarily require significant auditor attention. Key AK are matters of more significance. Depending on the nature, significant risk may not necessarily require significant auditor attention and therefore would not be considered KM. It's a judgmental matter. See the thing, it is a judgmental matter. One side they say that is significance. Again, the moment you put this as such, okay, we will be in doubt depending on the nature. Is that depending on the nature? What is the nature? To what extent it is? If we are taking this, this is the where we will pause a while. Okay, we will pause a while. That to understand the things is it to pause a while to understand. Depending on the nature, significant may not necessarily require significant auditor attention. Judgmental, we cannot say that it can be done. That is the reason in the examination we have to respond according to our understanding. Okay, whether we have to report or we should not report. Okay. What are the audit responsible in relation to information in circumstances where the auditor reissues or amends the report previously issued? What are the auditor's responsibility in relation to other information in circumstances where the auditor reissues or amends the previous? The auditor may restrict audit procedures on subsequent events to the subsequent events causing the amendment. The auditor may restrict audit procedures on subsequent events. The auditor may restrict audit procedures on subsequent events to the subsequent events causing the amendment. Means we cannot have audit procedure. They will restrict the procedures on subsequent events. Okay, they will receive the procedures to the subsequent events. Okay, they will restrict audit procedures to the subsequent events. Means they cannot do audit procedures second time. The auditor is not required to report to any other information obtaining after the date of original report. Is not required to report any other information after the report. Fine, that's okay. If the auditor does not restrict the audit procedure to the subsequent events causing the amendment, the other information section of the reissued report will cover all other information obtained of the date of the reissued. If the auditor does not restrict the audit, see what they are saying, when you have done once you have done the audit procedure, then we have to put a full stop there. Okay, that's very important. That this is what it says here also. Is that he can restrict the audit procedures on subsequent event. Here also you are saying that if the auditor does not restrict the audit procedures on subsequent event, The other information section of the reissued report would cover all other information obtained. If the auditor does not restrict, if he is not going to restrict procedures, the other information section reissued would cover all other information obtained as of the date of the reissued. Means, in simple words, in the auditing language, you have to make a cutoff. You have to make a cutoff. It's a very application oriented statements, okay? That is the reason. Very application oriented. Where we have to restrict, where we should not restrict, what is required. The auditor is not required to report any other information obtained after the date. This is okay. After the date of the original report. Means what they say that once it is done, again you should not make corrections. That is a simple message they are saying. Okay, once it is done, we should not make again the corrections as such. Introduce a new accounting for SME. Is it right? Just focus this one. Less complex entities. Okay, less complex entities. Read slowly, read twice. Okay, read slowly, read twice. The new standards for SMEs. This is a standalone auditing standard tailored for a specific needs to smaller and less complex organization from 15th December to 2025. Which are going to be implemented, just make it sure. Okay, must make it sure. The ISA for less complex entities is based on the underlying concept. It does not lower the quality of audit or automatically mean that they will be less work. It helps auditor concentrate on parts of audit that matter for simple organization. It is about doing the right amount of work in the right areas and suitable roles to guide that work. The standard acknowledges that the engagement may perform all the work and include amendments to the requirements accordingly. The standard consists of a list of qualitative characteristics of a less complex entity, but this is not an exhaustive. The standard clarifies that it is the nature of that determines this standard. Business activity, organizational ownership, finance, use of IT, accounting and reporting. Accounting, again we have to. The auditor clarifies that it is the nature of the entity that determines if this standard can be used. Business activities, organizational structures, finance function, use of IT, accounting, financial reporting, auditing, estimates, consolidation process need to be less complex for the standard to be applicable. There should be some level, is it right? You cannot say which one is less complex, more complex. Okay. Examples of it emphasizes that throughout the audit engagement, the engagement partner needs to consider whether the use of this standard is up. It emphasizes that throughout the audit engagement, the partner needs to consider whether the use of this standard is right or wrong. Examples of when the engagement partner needs to consider if the use is still appropriate in considering matters to difference of opinion or difficult or contentious matters. When performing risk identification and assessment procedures. The standard cannot be used when any of the following statements arise. Laws and regulation prohibit the use of this standard. The entity is listed. If the entity is listed, we cannot use. Therefore, the standard cannot be used. When the entity is listed, it cannot be used. Laws and jurisdictions, use of the standard of jurisdiction. Cannot be used, okay? Cannot be. The entity has public interest characteristics. Is it banking, insurance, pension funds? So is it right? Standard cannot be used. Is it? Standard cannot be used. I'm checking where which does this standard cannot be used. Fine. They have not mentioned anything. Okay? They say only this standard cannot be used. Laws and regulation prohibit the use of this standard in the jurisdiction. The entity is listed. It is a public interest entity. The group is audit is a group audit where any of the components meet the criteria described above, or when component auditors are involved. When we cannot use these standards, okay, we cannot use these standards. The audit is a group audit when any of the components meet the criteria described above, or when component auditors are involved. Is it? When component auditors were involved. Somewhere they have mentioned ISNA. Where is that? They say that the audit is a group audit when the component meets criteria, does not criteria describe or when a component auditors are involved. The audit firm procedure prohibit it. Why there is very challenging, is it right? Which one should be right where, that's very important, okay? Whether we should write or we cannot write. It's so thinly categorized. It's fine. It's very challenging us. Is that this standard? Fine. When they say these standards, is that fine? The audit group is involved with just less complex entities. Is that the audit procedures prohibited? Okay, fine. Okay, keep that there. The ISA for LC does not include any requirements addressing. Does not matters typically relevant to listed entities. Matters typically relevant to listed entities, including reporting on segment information or key audit matters. Matters typically relevant to listed entities. Should not be include any requirements. ISA for LC does not include any requirements addressing these things are not there. Okay, these things are matters typically relevant to listed entities, including reporting on segment information. When the auditor intends to use the work of internal auditors, as this would not apply to the audit of LCE. Is that means when they are using the work of internal auditors, is it right? It will not apply to an audit of LCE. When an auditor intends to use a report provided by a service auditor or a service organization, this would not apply to an audit of an LC. Okay. The ISA for LC does not include the readdress info. Right? If it is a not listed company, it does not include requirements. They matter typically relevant to listed entities. Okay, fine. Use of the work of internal auditor will not apply to the order of the group auditor and the component auditor. Then the auditor intends to use work of internal auditors. When the auditor intends to use of a report provided by the service auditor of a service organization. they are saying that in these situations, ISA for LC will not be applied very closely. Again, when we come across some questions, we have to see how it is going to be applicable. The standard is set out in terms of the flow of audit rather than the topics. Fundamental concept gap, general principles overarching, audit reference documentation, engagement quality management, acceptance of an agreement, planning, risk assessment, identification. Why they have said this? The standard is set out in the terms of the flow of the audit rather than topics. Okay, they are talking about the sequence. Okay, first fundamental principles, the evidence and documentation. Before that, evidence, no, we'll go by that only. Is that overarching general principles, engagement quality management, acceptance or continuance of engagement partner, planning, identification, responding, concluding, forming an opinion and reporting. It is also the flow set out in terms for the flow of audit. Planning, risk identification, assessment, responding to risk, assessed, concluding, forming an opinion, reporting, and a group audit. What they have said? At the planning stage, establishing the scope, time, and direction of the audit need not be a complex or time-consuming exercise. For example, a brief memorandum prepared after the previous audit, updated current audit based on the discussion, owner-manager can serve as a documented scope, timing, and direction. See that at the planning stage, establishing the scope, timing, and direction of the audit need not to be complex or time-consuming exercise. Okay, full stop there. Then they are talking about the example. A brief memorandum prepared after the audit report, previous audit, updated in the current period, based on discussions with the owner management, can serve as a document scope, timing, and direction of the current audit engagement. Establishing the scope, timing, and direction of the audit not to be complex, time-consuming process exercise. You can put both the things in one word also, timing and direction. Okay, timing and direction, or the planning scope, timing, direction need not to be complex. A memorandum prepared after the previous audit, updated in the current period on discussions with the owner manager, can serve as a document scope, timing and direction of that. Means whatever they have done last year, is that whatever we have done last year, based on the last year, they will make some changes. Okay, they will make some current changes. Is that they will make some current changes. It is no 1 second. Standard audit program or checklist created based on the assumptions of few identified controls. In determining materiality, in determining whether when a less complex entity, profit before tax and country is consistently nominal. As might in the case of previous, where owner takes much of the profit before tax in the form of remuneration. A benchmark should be benchmark such as profit before remuneration may be more relevant. If you